Good day, everyone. This is your European Open briefing for Wednesday, July 27th. My name is Michael Frentiades. I am the chief economist here at XM.com, and these are the key points you should know today. The fiscal stimulus plans in Japan reversed yesterday's yen's rise, basically. Australian inflation, I think, confused rather than clarified the issue about the Reserve Bank of Australia and what it's going to do next month. And in the end, the Aussie dropped. It's a very busy day ahead. We have second quarter GDP from the UK, US durable goods, oil inventories, and of course the Federal Reserve statement later. First of all, with the Australian inflation, as you can see from the chart, inflation in Australia is very low, but it did not come under expectations. Trimmed mean, actually headline inflation came in under expectations, but trimmed mean actually beat expectations. The trimmed mean excludes categories with extreme up or down price moves. Therefore, the chances of an August rate cut were slightly lower according to the market, but still they are more than 50%. Australian inflation is as low as it's ever been, according to the chart, especially the trimmed mean and the weighted means that they adjust for, they make certain adjustments to get a better picture of the long run trends for inflation. So a rate cut is certainly possible next month, and it shouldn't be a surprise. As you can see, the Aussie, it has been resilient around 75 cents. The initial reaction to the data was sharply higher, up to around 75.65. This was possibly due to short covering. Many people maybe were expecting a weak number. They went into this release short. But the Aussie retreated after this initial response, and as the data was also not strong enough to dissuade a rate cut. So this is leading to some choppy trading overall. Now, dollar yen is also volatile as Abe's stimulus is going to exceed 28 trillion. A few days ago we had 20 trillion. Yesterday we had 10 to 20 trillion. Yesterday we had around 6 trillion. Today, according to Abe, is going to be more than 28 trillion. However, there must be some cautious because 28 trillion could be a headline figure that includes loans and subsidies or guarantees. So the amount of actual new spending is going to be much lower. And it could also be spread over a period of years. So we don't know whether these figures can be a little bit confusing. Also, the headline figures as opposed to what we are actually going to get in new spending right now. There's a lot of speculation about the Bank of Japan decision on Friday. It is ongoing, and dollar yen should stay very volatile, including after the announcement of the monetary policy. On to the calendar, as you can see about Australian inflation, the year-on-year there was a slight miss for Australia's consumer prices, but trimmed mean was much better than expected. We are also expecting second quarter GDP figures for the UK. They are expected around 0.4%, that's about as strong as the UK economy was during the first quarter as well, a 2% year-on-year growth rate. US durable goods, we are expecting them to be down 1.1%. We are seeing a little bit of weakness in business investment and capital investment in the US, so durable goods will be looked at for sure. Pending home sales, we see the housing market doing well there. Pending home sales are expected to be up 1.4%. Now, crude oil inventories, we saw the crude oil in the United States trading less than $43. We are expecting a draw of 2.25 million barrels. We should note, however, there was a smaller than expected draw from yesterday's API figures, so that kind of weighed a little bit on the oil price. Oil price is key to watch at these levels. It should be quite interesting. And of course, we have the FOMC statement at 2100 GMT. And may I remind you that there will be no press conference. All we will get is the statement, and the Fed is expected to be slightly more hawkish in the sense of acknowledging recent strong US economic numbers, and of course financial market conditions since Brexit. They have not been that bad with the stock market, especially in the US, notching all-time highs. So, that's all from me for today. Thank you very much for watching and have a great day.